Hey everyone, welcome back to Corporate Decoder, the place where we decode the secrets hidden in plain sight by businesses. Today we are diving into a filing that reads like a company at a crossroads, a real nail biter, so stick around to see if Iterum Therapeutics PLC is weathering the storm or about to go overboard. Before we dive in, if you love getting the real story behind corporate filings, make sure you hit that subscribe button and the notification bell. And for more exclusive content and to chat with us about these reports, join our Discord community, linked in the description below. Alright, let's get straight to it. Iterum Therapeutics PLC, or Iterum as it is traded on the Nasdaq, has just filed a current report, a Form 8K, and it is not exactly a feel-good story. This filing is all about trouble with keeping its stock listed on the Nasdaq stock market. The main event here is a notice from the Nasdaq. Basically, the company has failed to meet some of the basic requirements to stay listed. Think of it like an organization having rules to be a member, and Iterum is on thin ice with theirs. Specifically, they've been told they don't meet a rule that requires companies on the Nasdaq capital market to have a certain minimum value of their publicly traded stock. We call this market value of listed securities, or MVLS. For Nasdaq, this minimum is $35 million. And not just for a day or two, it needs to stay above that for the company to be considered healthy enough for listing. The bad news is that their stock value has been below this $35 million mark for 30 days straight, which put them in this situation. To make matters worse, the Nasdaq letter also pointed out that Iterum doesn't meet other crucial requirements for listing, like having enough shareholder equity or showing consistent profitability, which, as we know, are vital signs for any publicly traded company. Now, Nasdaq doesn't just kick companies out immediately. They've given Iterum a grace period, a chance to fix things. They have until the 9th of June of next year, 2026, to get that stock value back up. To do that, their stock needs to close at $35 million or more for at least 10 business days in a row. If they pull that off, Nasdaq will send them a letter saying, okay, you are back in good standing. But, and this is a big but, if they don't meet that June deadline, the company will get a formal notice that its stock is going to be delisted. That means it will no longer trade on the Nasdaq. They do have the option to appeal this decision to a special Nasdaq panel, but there is no guarantee that appeal would be successful. It's a serious situation, and that is not all. This isn't the first time Iterum has been in hot water with Nasdaq. Back in August of 2025, they received another notice. This time, it was about the stock price itself. Nasdaq has minimum price rules, and Iterum's stock fell below the required $1 per S-share. They were given another 180 days to fix this, which gives them until the 23rd of February of 2026 to get their stock price to at least $1 for 10 consecutive business days. As of the date of this filing, they are still not in compliance with this bid price rule. Now here is where it gets a bit more complicated. If they can't meet the $1 per S-share rule by the 23rd of February, they might get an extra 6 months to fix it. But to get that extension, they would need to have already met that $35 million market value requirement we talked about earlier. They also need to meet all other initial listing standards for the Nasdaq capital market. Except for the bid price rule itself, they would also have to tell Nasdaq they plan to fix the problem, maybe by doing a reverse stock split, which is where a company reduces the number of outstanding shares to boost the share price. This is a common tactic when a stock is trading very low. So, what does all this mean for Iterum Therapeutics PLC? It means the company is facing significant challenges in maintaining its listing on a major stock exchange. Both the overall market value of its stock and the price of individual shares are too low according to Nasdaq's rules. This lack of compliance can signal to investors that the company is struggling, which can further depress the stock price and make it harder to raise capital. From a business perspective, being delisted from Nasdaq would be a major blow. It could make it harder to attract investors, limit liquidity for existing shareholders, and potentially harm the company's reputation. While they have some time to turn things around, the fact that they are facing issues on multiple fronts, both market value and bid price, suggests a deeper underlying problem. It is not just a temporary dip, it's a consistent failure to meet these fundamental listing requirements. Looking at this from a more fundamental, Warren Buffett style perspective, when a company's stock value and price are this low for this long, it often reflects a lack of confidence from the market. Investors are essentially saying that they don't believe the company's future prospects are strong enough to warrant a higher valuation. This can be due to various reasons such as disappointing clinical trial results for their drugs, strong competition, or an ineffective business strategy. The need to consider a reverse stock split, while a potential fix for the bid price rule doesn't magically improve the company's underlying business. It just changes the number of shares and the price per S-share without altering the total market value or the company's actual performance. The company's principal executive offices are in Dublin, Ireland, with a telephone number that starts with +353, which is the country code for Ireland. This tells us it is an international company and these listing rules apply to its US listing. The report also mentions that the company is a pharmaceutical company focusing on developing therapies. But it doesn't go into detail about what those therapies are or their stage of development. For a company in the pharmaceutical sector, success hinges on its pipeline of drugs and their ability to get approved and to market. If the market is signaling such concern through its stock price, it is highly likely that there are significant questions about the future success or the commercial viability of its drug candidates. The core challenge for Iterum right now is regaining investor confidence. They need to demonstrate a clear path forward, whether that is through successful drug development, strategic partnerships, or divesting assets to become more focused. The clock is ticking, and these Nasdaq warnings are a serious signal that change is needed, and it is needed quickly. Alright, that is our breakdown of Iterum Therapeutics PLC's latest filing. What is your take on these numbers and what they signal for the company's future? Do you think they can turn it around, or is delisting inevitable? Drop your thoughts in the comments below. If this analysis was valuable, hitting that like button really helps us out. And remember to subscribe for more deep dives into the world of corporate finance. Don't forget to check out the Discord in the description to continue the conversation. Thanks for watching, and we'll see you next time on Corporate Decoder.